Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 7:14 p.m. Eastern Standard Time, November 12th, 2017. 40 or so more trading days left till the end of the year. Time really flies. Fish Eyes, you in?
Yep, I'm here.
There you go, Jim. Good hearing your voice, brother. All right, so the session will be recorded. This is a free webinar. Want to get put it up there on the Clueless Day Trading YouTube channel so everyone else can see it and get an idea on the few words of chart analysis and market stuff. So all members are a little bit prepared for this coming week, going into the end of November. Good. So just make sure that everyone can see the screens in the back. Of course, hear my voice. It's been a very long and tiring weekend dealing with a bunch of stuff, but all good. So now we're ready to do this. Great. So everyone ready? Axita, are you in?
Hey, yeah, I'm here.
Okay, thank you. Fish Eyes is there, Nick is there, and PB is there. And I'm sure some other people might float in. All right, good. So first and foremost, a couple of broad points that I always make. What you see behind you right now is that live S&P futures, the E-mini. This is where we are right now. Futures are up approximately 4 points. Not bad. Not that they can't change, we know that. But so far, it's a good start to a very eventful and news. Very heavy on the news front weekend. I actually didn't post too much out there because there was a lot of stuff going around, both on the economic front overseas with President Trump's visit to Asia, and stuff going on here. So whichever the case, the good news is there was nothing bad, and that's always good when we start off a Monday morning and start off a new week. So everything was, I would consider, to be on the positive side, and that's a good thing. We don't need nasty surprises on a Sunday evening at 6 p.m. when the futures start trading. Whichever the case, the tactical charts that are presented offer the roadmap. So even if things go wrong, like many days you wake up and futures are down 10 for no reason, we're just looking around like what happened, and it turns out to be a pretty good day from a trading perspective. So the charts are meant to offer that roadmap, and the more you understand it, the better off you will be in managing your trades. So saying all that, we are coming into the latter part of the month. Keep in mind that we always have turbulence, give or take a few days prior to the 15th or so. And we already got some pretty major turbulence on the last week, and all these big candles down, red candles down, and green candles up is a manifestation of volatility that we got. Will we get more between tomorrow and Tuesday? Because the 15th is the middle of the month. We shall see, but let's be prepared for it. So far, looks pretty good. Let's just put it this way from a technical perspective. So, saying all that, we have we are winding down earnings season. This week is important. We have a lot of big retail earnings coming out, which are market movers. There's Walmart and a whole bunch of other retailers who will be announcing their numbers. And so far, what we've seen over the last couple of weeks, that the traditional retail companies, retail stocks, whether it be Fossil, whether it be Macy's and stuff like that, have actually done quite well. So because they were hammered down to Kingdom Come, and that Amazon's just going to take over the whole world and you would never buy anything at a store. Obviously, things are always exaggerated, but it was a good sign that those traditional retailers were doing okay. It does matter to the market. Walmart certainly does. It's a Dow Jones Industrial stock. And so that's going to be important. We have a slew of economic numbers that are coming out too, and the most important one is the inflation number known as the CPI, the consumer price inflation. Inflation number, if it's way too hot, It's going to throw a little bit of nervousness in the market, because that means the Fed will be forced to start raising rates faster than what the market thinks. All right, just keep those things in mind. So the CPI number, I believe, is on Tuesday. I don't have the exact date in front of me, but it is, it's that's a very important number. Aside from that, the thing that's going to drive the markets this week is a catalyst, both back and forth volatility, is, as you all know, is the tax reform stuff going on. The Senate is trying to reconcile the bill with the House version. There are some disagreements on certain parts, and every time we get those type of news flashes, you know what happens. The markets kind of get, a little bit jittery. The good news is that they're getting closer, and some of the differences between the exemption of state and local taxes and this and that seems to be working out pretty good. But we have to be aware of that. Okay, we have to be aware of that, and I keep people posted 24/7 during the during market hours, and of course after market hours too, through my tweets, if there is something big that's really happening. So far, from a diplomatic front, in my opinion, in my analysis, the trip to Southeast Asia and the ASEAN summit, which was today, I believe, was in my opinion on the positive side. It was a success. President Trump managed to be very diplomatic with our economic rivals, China. And that was, in my opinion, a positive. And there were good vibes that were coming out of China. So that means a full-scale trade war or some real nasty stuff going on when he met the Chinese premier would be a dangerous thing for the market. Okay, so all that has been moved aside, which is a very, very good thing on the global trade side, which whether we like it or not, global trade rules. Okay, that's just the way it is. We got to work it out. And that's what they're doing very well. So good. So those are sort of the bigger picture things that are happening right now. The tax thing is extremely important. They want to get this thing finalized before Thanksgiving or so. And this week we're going to get bits and pieces of it. So just I'll guide people as much as possible through that stuff. But nothing really negative is on there. Anytime that you're trying to make a major overall on the tax side, the U.S. tax system, it's a daunting task. It's a daunting task, okay? And it's not something that that happens in 1 day or 2 days. And these things normally take years, and they're trying to hammer it down in a couple of months, which I think is pretty commendable. So that's it. All right. So everyone good with some of the broader points? What's going to drive the markets this week, right?
Yes.
Good. Now, let's take a look at this chart here, all right? Because this is important. And this is so important for people who are not really that good or not trying hard enough to understand the volatility in the markets. What happens with traders in general, retail traders, and myself included, but I'm somebody who's basically as close to being as robotic as possible, and even then it's difficult, is the fact that this is a market of stocks. Okay, guys? This is not a stock market where we open up 10 S&P points and the Dow Jones opens up 100 points and everything goes up. We all know it doesn't work like that anymore. The market is segmented. The market will reward stocks on certain days, and they'll hammer certain sectors or individual stocks within that one sector. And we see that all the time. Now, this is something very difficult because this is a completely different market. It's been like this for a bunch of years. I've been talking about the algo HFT, which is short for algorithmic high frequency trading markets, but retail traders just don't get it yet. They just think that if the market's higher, everything's going to go higher. It doesn't work like that. Okay? It doesn't work like that. And that's why tracking charts and trading within certain levels, taking profits along the way, sitting on something even when it doesn't look that good, but the charts are saying it's okay, are certain disciplines which are not easy to master. I admit that. Okay? But people who are not even trying to do that are suffering. I had 2 guys drop out this week, and I felt bad for them because they're good people. But I know they're not being able to handle the market whatsoever because they never took the step to say, you know what, I really want to make these type of profits that's being delivered. And we are delivering some serious profits. Not every 100, 2, 3, 400% ROI is coming on one day. It's coming on staggered days. A certain group of stocks are moving very fast. A certain stock that is on a breakaway move, such as a case in point would be like a Roku, okay, bought on a Thursday after earnings, mind you, Wednesday or Thursday, I can't remember, went up another 200% on those calls or more. So the old line of thinking, oh, it's moved up, it can't move anymore, that type of garbage doesn't work anymore. High momentum stocks which are moving, I'm not just going to randomly put it out there for other people to jump in. I will look at the charts, I will make a determination, and I say go ahead and do it. And people who did it, they minted. Whether it be Roku, whether it be Square, which was a classic buy, way down after hours. Not way down, but still, for a $20, $30 stock to be down like almost $2, it's almost like the end of the world, right? If you're owning options. And then what did it do? It had a massive hammer reversal. I showed the stock, and I'm going to go through all this tonight because this is very, very important. And somewhere in here, I put it up. I'll put it up in a second. So basically, and then it just ramps. And those calls, which at one point were 14 cents, let's face facts, nobody bought it at 14 cents. Okay? But 20 cents, 30 cents, 50 cents, $1, they went to more than $3. That's in 24 hours, guys. And it was all laid out. I kept on saying, buy this stock. So those are the momentum types of stocks which will, when they move really hard. JD.com, another one. We're going to discuss that tonight. And I'm going to walk people through it. Another one, you just got to stick with the trade as long as the trend is your friend, and you will get red candles along the way. And those calls will go from $1.60 to $1.03. What, do you panic and sell? And then what happens? It shoots up back to $1.60. End of the day, pulls back to about $1.10 or so, $1.20. I'm talking about the 40.5 calls on JD.com. Or just play the stock. And then JD's numbers came out over the weekend. They're just sick. I mean, they just went berserk. I mean, they are the mini competition to Alibaba. Alibaba's numbers are so huge, it's not even funny. They're singles day or whatever. And it's just sick. Does that mean the stock's going to go higher? Most probably, yes. Or most probably it's built into the stock, because that's what happens sometimes. Because we all know the singles days were going to be higher, but the stock's been performing well. So this happens a lot, okay? And then there are these swing stocks which are generally trending higher, but not every single day, like Chipotle. Look at the charts on Chipotle, what I put out there. It's not every day it's going to go higher. But if you hold it, the charts are telling you it's got probably another 10 or 15 more points. I alerted Chipotle down in the down about 20 points lower. And I said buy the November 17s, and those November 17s been doing extremely well. And then I said, okay, go out there and sell the 275 and the 280s because it's already there, and roll them out to the 285 and 290s. So my point is very simple here, and this I practice myself. Volatility is going to shake us all. And you just look at that chart. Look at the chart of the market. If this is not volatility, and somebody says, oh, the market's not volatile at all. Yeah, great. That's a bunch of lies. Complete lies. It is a volatile market. It is a volatile market where it's not moving around 300 points back and forth, but it's moving around 50, 60 points on the Dow Jones, 10, 20 points on the S&P 500. So people who are not taking the step to understand the charts, I am sorry, but they will just not survive. They will blame the market, they'll blame the service, they'll blame whatever. The only person they won't blame is themselves, because that's what they're doing. And that's the God honest truth. This is not grandpa's market, like I keep on saying. These are markets where you got to manage your trades. You can't be like, lopsided on one side or another because you're too excited, Too much excitement will kill you, just the way too much despair will leave you in the doghouse because you won't be in the trade. And you got to keep an eye on this. And I keep on producing real-time charts all the time so you don't have to dig it in and try to figure out what the heck's going on. So that's my 2 cents on that matter. And I think I speak the truth, okay? Because my job is to try to help people as much as possible, not to put them in harm's way. If there was no volatility in the market, every single one of my charts would be up. The options trades would be up 300-400% within 2 days. That's serious. But there is volatility, and that volatility is forever. All right, let's get into this now. First of all, we were in a trading band, as I pointed out, back till about the middle of October. Okay, zigzagging its way higher, putting people in just like that bunker mode. I know when retail traders get into bunker mode, every time they see a big fat red candle that's coming along the way and they're in a position. Okay, and then they miss out the big, humongous run-ups that happen along the way. So we broke out of that range with this massive, huge bullish engulfing, whatever you call it. That's a rocket ship candle. And that all started off right here at the bottom of this range, which was in the 2540 range, okay? Which is a very critical level. There were multiple, you guys, people who are somewhat active or somewhat care to look at my Twitter feed, know very well that when you get multiple hammer reversals, those are the Chinese firecracker type of long tails. You can see that, okay? I've said it before, I'll say it again. That means the market wants to go higher. Now, does it mean it wants to go higher forever? No. It means it'll reach that next level, which are all drawn out on this chart. It'll reach that next level, it'll pull back, and then when it reaches the upper end of the level, at that time, I remember the resistance was 2580, and that was that level. And it comes close to it, and then it decides to basically do what it needs to do, which is fall. But when you look at this thing, when you look at this chart here, every single thing is marked. Let's say somebody came in and looked at this chart, had no idea about the market. They can just trade off these frigging arrows. I mean it. Now, if they jump and squirm on every little candle, okay, because that's what volatility is during the day, let's face it, then that's their mental frame. And that mental frame, like I always say, scared money never wins, because you'll be selling too early, not buying the lows, not taking any positions whatsoever, waiting for whatever moment that I don't know. I don't know if there's ever, in my opinion, a perfect moment. The only perfect moments in the market are when the markets are down 500-600 points, or these mini crashes that we get. Things get deep oversold. I even put arrows on the stochastics. I mean, you can't get any better than that. Seriously. Deep oversold. By now, people should know what stochastics are. You get deep oversold like that, you got to buy. Because every single time you get deep oversold, the market bounces higher. The market at one point will stop bouncing higher when we turn into a bear market. And believe me, I will tell you when we turn into a bear market. We are far from a bear market. It's not a runaway bull. Like one of the finest minds who called this market, I'll put that article up, said this weekend, we are in the 9th inning right now. We're in the early parts of the 9th inning. People who follow me know I've mentioned that before. This is called Wave 5. Wave 5 takes us eventually, by the end of the year, to levels no one can imagine, possibly 24,000 on the Dow. And the funny part about this market is, because of this volatility, okay, retail traders and institutional traders, not just you guys, they are not making money. This is the most, and you've heard this from other sources, and I've said this before, hated bull market ever. This is the most hated bull market ever because nobody is really happy. Individual traders who are tactically active, they are happy. That I'll give you. They're nailing some big trades that we're putting out there. They're taking it down, but nobody's euphoric. A bull market ends when there is way too much euphoria and people think it's just so easy to just buy something and it's just going to keep on going higher. This is a market of stocks. Hit the right stock, it's going to take you to the moon. Even a right stock can go a little wrong because of these waves of selling that come along the way. Then it becomes the perfect stock to buy. And it's happened repeatedly with Apple, with Amazon, even with Tesla, which is fighting to get into a zone. We'll go through that chart, tonight. It's happening with companies nobody thought would be 175, possibly going to 180, which is Apple. And we played those earnings. The Googles, you name it. So they are not only are they leaving retail traders in the dust, they're leaving institutional traders in the dust. And some of these guys who come out there on the media, and I'm sure some of you listen to them, they're just so frigging bearish all the time. It's good to be bearish at certain times when it's a corrective pullback, but those corrective pullbacks don't last for more than 24 to 48 hours. So what gives? Now, if you think you're a mutual fund manager, and this is another major mistake that traders make. This is another version of the chart. Many of you who track my charts know very well. This is the volatility channels. This is where we are right now. Futures are up about 2 3/4 right now. Call it 3 points right there. So some like to think that they can make a huge trade. And what do I mean by that? Well, I know, this is how some think. I know this market's going to crash at one point. I'm just going to wait for that top. Guys, I got news for you. Tops are rolling tops. Tops are created not in one day. Tops on markets are created over a period of time. And in between that time, the bull markets roar higher like this. And during that roaring higher, it does this. So what do retail traders do? They sit around doing, I don't know what they do. I'm not saying all of you guys. I'm saying some. They give up, which in a contrarian way is a very good thing. The more retail traders give up, the better off tactical traders are going to do. That is a fact. Because this type of volatility, tight range volatility, and then the wide range volatility cannot be handled if you're just looking at prices and thinking that, okay, it's going up, it's going to go up every single day. Nope. But if you look at the trajectory of the markets from the middle of last month, this is from the 13th, right? So 1 month, you're going to see the trajectory is still higher. We fell off a little bit, and now it's going to try to enter this channel. But from here to here, it's higher. But along the way, it's got a lot of ups and downs. Lots of ups and downs, okay? So these are simple things, but they are very difficult for people to sort of handle. Good. So any quick questions on the actual market charts here? This is what we are. This is the green candle when we're up about $1.75 right now. I believe the Japanese market just opened up. New Zealand markets opened up, so there's a little bit of selling pressure there. Chinese markets are doing very well right now. I'm looking at Bloomberg on top of my head. And so this little pressure, see, right there. Now these are for futures traders to deal with. For us to deal with is what the patterns are showing. So this one, It's clear as day what it's showing. These are these big hammer reversals. These are the big support levels. You break these, then the chances of higher probability that you're going to fall. And then if it stays within a range, then you're going to chop around within a range. This was the 1 hour chart. You can see here the stochastics are in a reset mode right now. They got overbought. They're resetting. They're resetting in an hour and 41 minutes since the futures open. Futures open at 6 p.m. So they're resetting. Look at that. It's happening in front of your eyes. They're going to come down here again, and they're going to basically bounce up again. Now, if we get a huge red candle because of some black swan event, unquantifiable event that happens between now and when our markets open or global futures at night, well, that's a different story. We got to, there's nobody can, call on that stuff. All right, nobody can sit here and say, oh, that's. We can't be talking about black swans all the time because we just. Because we think that the world is ending every morning, right? So we can't be doing that. So here's your white channel, and that channel actually measures down to 2560. So far, we have played each one of these moves. These are those W moves known as Dragon Bullish. Major resistance here at around the 2587 level. And if we do happen to enter that, then the next level of resistance comes into play at 2590 or so, or 2588 on the E-minis. That's just the way the markets are programmed to do. There's nothing that you can do to wish the markets a straight line from here all the way here. Doesn't work like that. Accept it. All right. So that's it. So this is a very critical chart because this one is basically walking you through. So when I'm putting these up, and you don't need to trade every one of these bars. Let me just tell you that. People who are not active, don't have the time to do it during the day, shouldn't be trading SPX calls or thing because these things are so fast. And that reminds me to remind people of a very critical aspect of the business. And that is speed and flexibility. Look, you can make 30, 40, 50% on the SPX calls and puts within minutes. So if you're trying to wait around and come back an hour later, the picture's changed. So if you do buy those, one helpful suggestion would be just put a sell stop out there, a limit, whatever, or you put a buy limit where you want to buy it, and the buy levels are already posted here. So that's the best way to do it. If you think you're going to get the exact highest level or where you're going to sell it, because these things move very fast. You wait around 5 minutes, the prices just go boop, just other way. And as it's moving higher, it will basically chop around every 10 minutes, every 15 minutes. So if this is cooperating and I'm saying the upside is intact and all the stuff that I say during the day, then you don't need to get panicky every 5 minutes. You can throw out the order saying you bought it at 2, just say you put a sell order out there at 3. You get done. It might go to 5 like it did here on these big hammer reversals, but at least you took some profits off the table. Because if you're not watching the screens and you don't have the luxury of doing that during the day, which most people don't, then don't trade fast-moving stuff. Stick with some of the swing trades. Stick with the momentum trades. Stick with the Alibabas and the JDs of the world. Don't trade Priceline. Don't trade Tesla. Don't trade SPX. Puts and calls. You don't. Because, you gotta keep your eyes on that screen. So if you don't have those eyes on the screen or you don't have the luxury of doing that, then don't do it. Trade the Junos of the world. Trade the VRXs of the world. Our good friend Corey gave us that alert. He actually gave it to me like 4 days ago. I finally put the chart up and so we bought them at 45, 50 cents. They went to 80 cents. They went to 89 cents. Do the math. 50 cents to 89 cents, call it 90. It's 80% on your money. What's so difficult about that? I even thanked Corey. I said, thanks for giving us that trade. Our good friend Bob, member, gave us some terrific trades. He gave us, I remember, Overstock 3 weeks ago. Poof, went through the roof. The calls were like $1 something. They went to like $6. Now in between, it did do a dip one day, but still, the first move was 1.25 to like almost 4. So stick with the GEs of the world. We're going to go through that in a minute. So anyway, so that is, I think I explained in the simplest terms that the face of volatility looks like this. I know that when markets are going to drop, I shouldn't. That's a very hubris type of statement. Too much like, you understand. You guys understand hubris, right? Don't want to get too like, fat-headed. I certainly don't. Trust me. I certainly don't. I'm as humble as you can get. My humility and my respect for financial markets is deep. Okay, guys? I respect the power of the markets to make money for you and take money away from you. So the bottom line is that guys like Trent, who's just coming in. Hey, Trent, you there? Can you hear us? Okay, I'm sure you can hear us. Who are active traders. Here's the time and energy. Now, some terrific trades that I give out there. And it gets caught in some of the ones too, because he's not looking at them or not in them. But that's what I'm getting at. I'm just not picking on one person. I'm just saying, just trying to help. That's all. So that's it. So why the E-mini so important when I'm putting these charts up? You don't have to do it. I'll do all the hard work of structuring it, putting it out there. Because if I'm seeing a real breakdown, then and I'm putting it out there, then if you have even if it's a little profit, you got to get out. Because you don't know whether this is going to be a hammer reversal of this very powerful support or whether it's going to break through that. So got to watch these. This is the volatility channel. Same chart, just with different channels. Here is one that's really important. Okay? And this is a great chart. It's a great chart in the sense that this is for the NASDAQ. This is for the tech junkies who love to trade that $10, $20 positions, moves on the price lines of the world and the Amazons of the world. This is critical. Okay? So when I look at this chart here, the first thing that comes to me, it's a rising wedge. And the rising wedge resolves itself somewhere on the upper end of the scale between now and, let's say, December, up here. Somebody might look at this chart and say, man, this is a horrible chart. No, it's not. Is it volatile? It sure is. These type of moves here, this is where it started, right? Those big long tail reversals. I put this big fat arrows, and not that hard for anyone to understand that. Okay? Hammer reversals. Break out of a range. Remember, this was a range. Right there. Put this right there. That's a range, okay? That's the bottom end of the range, the 6,000 mark. The 6,000 mark on the... Hold on for one quick second, okay? Hold on, guys. You guys there? Hello?
Yeah, we're here.
Okay, good. Didn't want to lose the connection. Sometimes it's like connection drops off the thing. So all right. So this is your highly volatile, uptrending Nasdaq techs primarily. Okay. The Nasdaq 100 futures obviously includes biotechs in there too. But one second. So, but there's your big uptrend line, right? And we're here right now. So looking at this thing here and looking at the stochastics right now, the 1 hour stows on the NQs, we call them the NQs, right, are oversold. You see that? Trying to drag this thing here. I put a red bar here sometimes just so that people can put a reference point on the oversold side. So you got this oversold. It's gonna come down here. It's probably gonna just kind of move around here a bit. Nothing stays oversold. There's always a quick reflex bounce, just so you guys know. Within a matter of hours, certainly not days. I'll tell you that. Each of these have lasted a little bit more than a couple of hours. So the level where one needs to be concerned with are obviously put in place. This red line here. And again, you don't need to be a specialist on the NQs. It's just that when I'm putting out the charts there, you know what you're looking at. So if you're in tech stocks and stuff, you better be careful if when I'm putting this NQ chart and I'm putting a comment and this line, let's say for example, this is where we are right now, just breaks down, okay, doesn't hold support, and this is the big line, the 6,200 mark. So, and then you're like, oh no, it's gonna bounce. No, that's why I say focus on the charts, because if it breaks here, then you're going to come and test the upper end of this range that we broke out of back around the 26th, 27th of October, right there, in this ferocious move that started around the 26th of October. So the key is that is it possible that it comes down and retests here? Sure it is. Sure it is. The big tech earnings are out of the way, but I believe we have Cisco this week, but Cisco doesn't have that much weight anymore to really drive all techs down. It's really the Apples of the world which do that, right? So if there's like, say, some sort of like really negative news on Apple, then you can expect the NQs to fall accordingly. So I watch this all the time. I glance at it, all through the day. But so far, even if it falls here, that was your last hammer reversal. I don't put these things down just for people can read. These are important parts. That's your level. Then you could possibly get a big bounce from here, and that would resemble a W formation like we keep on playing all the time. Right there. There you go. Remember one thing about Clueless 8 trading. I'm not trying to make you guys like some sort of technical genius, because I'm not. That's news to a lot of you, okay? I'm not a technical genius. I'm a great pattern reader. And over the years, I've come to realize that if the way my charts are structured and drawn, they seem to be very precise. There are guys out there who put out charts there with wave all kinds of like heavy duty stuff on it. You guys wouldn't even understand it. I don't understand it. Okay? And you can see that on StockTwits and other forums and stuff. I try to keep it simple. That's why I just show you the stows. I could show you like 5 different indicators. But these, this is the simplest thing that works. So this is where we are. Now, if we do get a move higher into this wedge, you're going to see a very sharp move up to the previous high, which was right here. And possibly a move higher into at the upper end of the wedge. This is the point where a lot of people start getting excited. Well, don't, because this is the point they're going to hit the market down. That was an intermediate wedge in between this. Did exactly the same thing. So this so far is still okay. And bear with me. So this so far is still looking fine. If we break any one of these big red lines, that's why I highlight them. The width of the line shows the major, sort of supports, not sort of supports. Then obviously some things are changing fast. Nothing detected yet. Let's move on to charts now. Okay. Any quick questions on this till this part, guys?
No.
Okay,
Yeah, nope.
good. Now, let's take a look at Amazon here. Okay, we played this. This was the big moonshot after earnings. Trust me, before earnings, Amazon didn't look that great because this is what the chart looked like on Amazon right before earnings. And honestly speaking, it looked like it wanted to go and retest that 954 level. And see that red candle? That was a candle at 3 p.m. on pretty reasonably high volume, to be honest with you. 1.3 million shares dropped exactly between 3 and 4 p.m. right there. And we played Amazon, I believe, through a straddle. Came out serious winner. Actually went well above what I thought. I sold a little bit early. So this was Amazon pre-earnings. You can't always do charts on earnings, but I certainly look at them before I'm suggesting the earnings trades. But with these type of big moving stocks, you always have to take a position. That's just my opinion. If you're a real trader, because it doesn't matter what the media is saying. I would say a good number of analysts were somewhat bearish on Amazon. Yes, they knew the numbers were going to be good, but they're like, it's factored in. They're spending way too much money on Whole Foods and all that stuff. But it doesn't matter what they say. It really doesn't matter. So this was just literally the bazooka. The stock was up. I can't even remember. It was horrendous. It was up 140 points or something, right? That's horrendous. And the sad part was that a majority of retail traders just sat aside. And it's a sad commentary. Because if you did a straddle, your puts would have gone to down like 80, 90%, and your calls would be up a gazillion percent. Remember one thing about life and trading. The upside has no boundaries. The downside always has a floor. Traders don't seem to realize that. Your options, let's say you bought a put option for 4, right? And a call option for $6. Your put option, you can lose all of it. It can go to 0. And your call options, if it goes the other way, goes to 0. Correct? So most you can lose is 100%, correct? It's a very simple thing, but people don't realize this. Most you can lose is 100%. However, on the upside, like it happened here, the 6 can go to 30, or it can go to 40, or it can go to 50. That's what happened with Priceline when it fell. The straddle worked nicely because the calls went up a gazillion percent. I'm sorry, the calls went down to close to 0, and the puts went up a gazillion percent. So you can only lose 100% of your money. So if you buy 1, for example, you lose $600. And if it and so you lose $600 here. I mean, let's say in this particular case, your puts went to 0, so you lost $400 here. Okay, that just went up in thin air. Boom, gone. And your 6 goes to 20 or 30 or whatever it goes to. So whichever the case, you come out on a winning side of the trade. Upside has no boundaries. Amazon couldn't go to $1,200. Amazon is not going to go from 1125 it closed at to 0. It can drop 100 points. Think about that next time you trade, all right? So let's take a look at the chart here. The chart looks pretty damn good. It's in a very defined range right now. And this can be traded daily or during the week. You have a very defined range. This was your previous high, and that was around 1123. So it's trading between 1123 and 1135. Does it really matter, to be honest with you? If you are swinging Amazon to, let's say, December 15th, because they're going to have it great holiday season. No question about it. Okay? That the stock, from what it looks like, does it matter if it's down $2, $3, $4? I mean, Amazon's down $2, $3, $4 just in a matter of minutes on the market, doing that in the first 15 minutes of trading. Another thing, remember, if you're trading these stocks and the gap's open, sell it right away in the morning. Yes, sometimes they'll just turn around and just keep on going higher, but most of the time, the algos, the machines will sell it in the first 10 minutes because you're up nicely. Remember, a hedge fund buying 10,000 shares of Amazon or 5,000 is up 30 grand just overnight. They'll take that 30 grand. So there's a lot of volatility. If you guys notice, as active traders, you guys should notice within the first 15 to 20 minutes of the market. Big time. So either you can hold your nose and say, I'm swinging this. I don't really care what happens first 20 minutes, which is fine. Unless there's a different type of atmosphere in the market, in which case I'll let you guys know that for sure, as I always do. If there's a trend change or mood change in the market, I will certainly alert you guys. But just pure volatility is not a mood change. It's a little sneeze. So you can sell it, the first part, and then you go ahead and buy it by trading, not necessarily, you can trade on this chart, but I use think or swim a lot when I'm trading the Amazon part, and I use my quad system. It's very clear where the candles are reversing. Here, this is more of a swing chart. So you got a level here of 1122. You got an upper end of 1135. You can trade the stock for 10 points. The options for 10 points. I put out the alert to buy 1130 and 1132. I think it's going to work nicely. Now, if it breaks out over this range, we'll see you later because it's going to go hit right the upper end of this channel, lower end of this channel, and is asking a lot, but that's almost in the 1155 range. Will it be one straight candle up? I don't think so. I think it's going to zigzag its way higher right there by Thanksgiving. That's my opinion. Now, if we fall into this broader trading range, which is 1125 to 1080, then you can short the stock. There are traders who use my charts to go the other way and make money. Great for them. I'm really happy about that. Because the charts are a tool that you need to use. Now, there's a red line here at 1115. So 1115 sort of the red line you don't want to cross, the support. Because below 1115, it opens up the doorway for the stock to fall towards the 1080 range. If there's some bad news on it or whatever the case, that's the market, then one should be watching out for you. Otherwise, it looks pretty likely, given the stochastics, which are trending upward nicely. Remember, the stows help you stay in a trade or bail out of a trade. That's why I keep on saying, don't just watch prices. If you just watch prices, you're done. And many of you know that very well. Because the prices are so random and fast the first half an hour or the first hour or during the day. So you got to watch this. This is trending higher nicely. Can it dip a little bit? Sure. But as long as it's trending higher and not crashing to the lows, then you can stick with this trade for the next week to 2 weeks. And that should bring you to to retest the highs, which is 1136 for the stock, I believe, right? What's the high on? I'm looking at my other screen. Hold on. 1135.54. So let's call it 1136. So 1136. So you got yourself a good 10 points. Your calls will be up about 70%. Don't have to always wait around for like 200%. So that's Amazon. It's looking fine based on what we see right now. And seasonally, it's a good time. Another thing to note, seasonally speaking, November to March, with some quick sharp dips, which we get in January because of tax loss selling, which are pushed out to the next year, right? Tax selling. So you get that early dip in January. November to March is considered to be one of the strongest periods in the market. Given the bull market that we're encountering right now, and have been for years now, but more so now, there's a good chance that the market, continues its upward trajectory overall going into the first quarter. So that's Amazon. Let's take a look at JD.com. Look, I don't normally trade JD. And I alerted people JD around the 35, 36 level, 37. This is a walkthrough chart. This is like, I don't know how more somebody can walk through somebody. This is like putting you in a stroller and taking you out for a nice walk in Central Park. Seriously. Right? It's picture perfect. Not picture perfect to the moon, but picture perfect in walking you into making profits. Here's your uptrend line, multiple hammer reversals. Notice there are red candles, red candles all along the way, but they're minor, except this one. When I alerted the stock in this range, it kept on going. It just kept on hugging the channels and then hit what I said it would hit. Remember, the entry on the stock was somewhere around the end of October. This was the previous highs, intermediate highs on the stock, 40.81. I said it was going to go to between 40 and 41. Well, it went exactly there. You can't make these things up. Where'd it go? Right there. All you had to do was stick with the trade for a couple of 100%. Or as it climbed along and it hit each of the channels, you could have taken some profits, which I did more like it, instead of just holding my nose and just saying, okay, it's going higher. I knew it was going to go there, but along the way, it dropped from, let's say, 38.60 to 37. Like whoopee, like everyone's like all scared and everything. All it did was reset. It got overbought, got oversold. Then it kind of vacillated on this downtrend line. That's a downtrend line. Remember, that's a downtrend line from 46. So the downtrend line was engaged, and there's always resistance at the downtrend line. Always. That's why it's called the downtrend line. And then it gapped open, pulled back. So this move up, you got like almost a double on the options. So sell. Wait for it to pull back to the lower channel and then keep on going. Because if you are not trading this based on the charts as a swing trade, sometimes I get these excuses. Well, I'm so busy, I can't watch things as if you're watching anything. This is a swing trade, just one of many that Clueless A Trading puts out there. If it's a swing trade, you swing it. You don't need to watch it like a monkey on a hot tin roof, like that term goes, every 5 minutes. And these are lottos. These are not $20 calls like Priceline. You got to pay an arm and a leg. And unless the stock is moving $20, $30, those options don't really work. This is 60 cents, $1.10. Come on, guys. So that excuse cuts out, because I know many members in our group who are full-time, very busy, successful professionals who are doing extremely well, trading the swings, and sometimes when they have time, trading the intraday stuff. So what's there to this? Now, the stock might very well gap open to 40.78 after going up, hitting that major gap fill. That's a gap fill. It hit that gap fill. Can't get any more perfect than this. And it crossed over the gap fill, pulled back at around 3 p.m. right there. So once it hit the gap fill, you could have said, okay, I'm out of this trade. I'll re-enter it because it hit the first gap fill. There is another fat gap fill all the way up here at 43. Do I think it goes there? Hey, if their numbers are strong, going into, I believe, their earnings at this Thursday or so, or this week. then they're going to go to 43 bucks and more. So right there. And now the numbers are coming out. I mean, the JD number was so big it wasn't even funny. I mean, they're like they're like a little version of Alibaba. Let's just put it this way. Except they sell more high-end stuff. That's it. Any questions on this particular chart? No?
Nope.
Okay,
No.
exactly. So the question one has to ask themselves, and I mean this, guys, why are you guys not making, some of you, not making 300-400% of these type of swing trades? The answer is simple. Some of you are just damn scared of nothing. Just won't do a swing trade, won't do an active day trade, then what the heck are you doing? You think markets are going to constantly keep on rewarding you? Oh no. These markets at some point are going to get so nasty, you don't want to turn the thing on. And I will be as short as it comes for that period that it's going to go through that big corrective phase. This is the easy part of the market, to be honest with you. And it's so goddamn hard, excuse my French, for so many people. What's going to happen when the markets turn nasty? Well, it doesn't really matter. Like I said before, the lesser the participation of the retail human trader, the better off us tactical traders are going to keep on doing through our constant focus and through our chart trading. Not hoping, not like sitting around making excuses. Seriously. So ask yourself a question. These charts are very easy to read. You just gotta do it. You can't buy it 60-cent call options for $1, please. And then some people are willing to pay 17 bucks and 12 bucks and 30 bucks to buy a price line call. Come on, what's going on here? Percentage wise, these are giving you a higher percentage return on your money than trading the higher. A $7 call seldom goes to 50 unless the stock makes a really big move. A 70-cent call does many times go to 3 bucks. That's 400%. Think. So here's NVIDIA. Big winner. The options gamma and delta weren't that high. And I expected the options to move up a lot more. Still did great. The options went from about $8, $9 to about 13. I expected it to be higher. These are they went to 12. So they were up about 50%. The day before they were 778. And then as the stock moved and then by noontime, they went to about 1190. But look at the chart on NVIDIA. And this stock I've been walking people through for weeks now, months. And here's a serious chart. This stock most probably will go right here to the upper Bollinger, which I've shown by a big fat arrow at 2222. That's $6 from here. Make some decent money on it. Your support is right here, this breakout level. Chances of it breaking below 213 are low right now. It can happen, but their numbers were so strong, and the guys are inking deals with some of the biggest car companies and God knows what. It is no longer a gaming chip company. It's artificial intelligence, driverless cars, real high-end stuff. Let the charts speak for themselves. So you can draw a uptrend line here. Wouldn't mind it, to be honest with you, for this stock to pull back here and then make another move up to this level. This is the upper end of the bullish channel. That's 228. Naive retail traders think that it can go to 228 just like in a day or two. It doesn't work like that. It doesn't work like that, okay? NVIDIA is a classic stock, as you can see, all the way from 190, which was the last breakout level of a stock that moves in phases. Bull flags. I even put this down. This particular chart is a tutorial in classic technical analysis. It goes up, it creates a minor consolidation, bull flag. This is a real bull flag. That's more of a triangle consolidation like that. After it moves up, it's still a flag. Breaks out of that, creates a ascending bull flag, breaks out of that, goes up here, hits the upper end of the channel, goes into sell mode. And then it goes, before earnings, again, you can do a straddle because these are high-tech stocks. He could have gone to 191. In fact, the stock, if I remember correctly, it was lower after hours, right? At one point? Yeah, it was lower after hours. Yeah, it was lower. It was down. NVIDIA was down after hours. There was no indication of what was, going to happen. And then it started to go higher. It gave ample time to, even when it opened, it was very volatile right there. It was at 212, whatever. And then it started to pick up steam. It opened up here, pulled back, created a green doji. That's a green doji. You can see that right there. And then it held that up, held that previous high, and then it created this big, fat, massive candle. Now, is there an easy way of figuring that out? Unfortunately not, unless you're watching the charts. Why? Because these algos are vicious. They are complete manipulative machines. In fact, I'm going to put out an article tonight which talks about how, just like human traders are crooks sometimes, right? Big institutional traders, they're like doing all kinds of like funky stuff and they're talking to other traders and doing, these machines are doing the same thing, except they're doing it at lightning speed. So, there's no way you can control a algorithmic high frequency trading black box moving prices around before it takes it higher. So now it's created a flag. That flag should hold the 215 level, and then it moves from here, and I believe it caps itself at around 222. That's it. Start learning when I put my charts out where something is going, especially when I'm putting arrows and God knows what I'm putting out there to help everybody. Like somebody said, just follow the arrows. And honestly speaking, just follow the arrows. All right. If you don't want to deal with anything. Okay. Now, here is GE. Now, after I recommended GE on Friday, it was up 110%. It was more like we were in around 40 cents, went to 70 cents. That's a 70% move. The low was 30 cents. Now, if somebody tells me that they saw my alert and didn't bother to buy GE calls, especially off this chart, I feel sorry for them. I really do. Now, if GE croaks tomorrow, I doubt it. I'll buy it because this looks like a pretty definitive bottom. And they have a big investor day tomorrow. But more importantly, if just buying those calls at around those 35, 40, 42 cents, you could have made yourself 70% on your money. Or let's say 50% of your money. Question is, why are some of you not doing it? It's so idiotically stupid. I'm serious. I mean, I honestly mean this, okay, in a nice way. That it's not even laughable. If somebody comes up with a great excuse why they can't do this, I have no idea. This is a classic case of a stock that has been hammered to kingdom come. This was one of the fifth or sixth biggest company on the Dow Jones years ago. GE, because of their turbine issues and all kinds of stuff, fell apart. When we did GE, I believe it was a few weeks ago, we did the trade, it generated close to 200% on the lottos. If this one works out, it will give you at least 400%, as long as the swing trade is intact. So what are we looking for here? This is classic. The volume, very heavy volume. If you notice, this was all sells from 24 down to 19. And then the red bars, the sell volume basically died down. And then all of a sudden, it started to move on Friday. And it was up on my radar. And I said, something's going on. And what's going on is GE is very serious, their new CEO, of cost cutting, selling, spinning out some of the divisions. General Electric has multiple divisions of different high-tech stuff. And that will unlock intrinsic value within the company and hopefully drive the stock higher. Let's look at it from a technical basis. You got a big volume candle. You got the first after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. After almost 12 days, the first real bullish engulfing candle. Guys, let's keep it simple. You see a fat green candle, just fucking buy it. Because it'll at least give you another green candle. That is generally how it happens. So this one was a 70% move. Here you got a red line coming down here. That's called a mid-Bollinger. Here's your Bollinger Band, the cloud. This is your mid-Bollinger. That's at 2133. The beauty about playing these lottos are on these type of companies, whether it be VRX, like our friend Corey gave us, Golfman, and or whether it be multiple type of lotto trades that I present to you guys, which are in the 60, 70, 80 cent range, that type of stuff, UAL, things like that, is that if it moves even 10 cents, you could be up 10% on your money. You don't need a $3 move. If we get a $3 move on GE, which ain't happening tomorrow, I don't think so, seriously. I mean, that'll be just too much of a lottery ticket. But even if we move up to 2133, you got another 150 to 200% on your money. It's all about percentages. It's not about what you think or I think. So if we get another candle, it is obviously going to hit a major resistance at this downward sloping mid-Bollinger. If this is also very important. The stochastics are now starting to move higher. So if this stochastic continues, zigzags its way all the way up here, then the stock will hit 2133. Or if the stochastics really move up into overbought zone, then it's very possible it hits this dotted line. What is this dotted line? It's the downtrend line. This is the major downtrend line. Well, forget about GE going to 27. In that case, the Dow is going to be up like, 300 points from here, even though GE is a very small, weighting. So let's look at $23. So if this goes from $20.49 to $23, you got more than 400% on your money. Now, just the way pattern symmetry dictates, it fell like this. That's all automated selling. It created a double bottom. And now if it moves up, this didn't happen in one day. It happened over 7-8 days. So let's say this is a 10-day trade, which is 2 weeks, right? 5 trading days in a week. So it zigzags its way up and hits a downtrend line. And what happens generally at the downtrend line? It falls again. There's a gap fill here, mini gap fill or whatever in the upper Bollinger at 24. Let's forget that for a minute. So it zigzags its way up. That's a pure pattern symmetry, a perfect W formation. GE type of stocks generally can do that because they're generally bought by institutions. Institutions own GE. They like General Electric. So if they like what they hear tomorrow, and this one, even if it dips a little bit, because there's going to be some volatility tomorrow on the Investors Day, then you stick with the trade. So anybody who gives me another long-winded excuse that I'm too busy during the day to look at your alerts and stuff is just lying to themselves. And lying to yourself just keeps you in the doghouse. And that's a fact. Now, what's the bearish side of the picture? The bearish side of the picture is that it creates another big fat, which I don't want to see, red candle, and it breaks below 1965, in which case you can short it. Now, the reason I wouldn't short this stock is because it's so sold out, oversold. But one can, if it does create a reversal red candle and hits 1866, it's going to hit 1866. Can it happen? Hey, I've been in the market long enough. Anything can happen. But so far, looking good. So far, looking good. I can draw another downtrend line, and this is a very easy chart to read, guys. There. I can draw one like this. So over the downtrend line, and now the first point of engagement is around 21.31, which is roughly a dollar from here. That's a lot. Stock was up just what, 50 cents or 60 cents, and the calls were up 70%. If it's a dollar, your calls are going to be up 140%. I don't need to say anymore. Let's take a look at, we looked at NVDA, we looked at this, just giving you a little sample of the charts here. Let's take a look at Alibaba. Very volatile, very powerful. Repeat it again, very volatile, very powerful. Uptrend channel intact, we played it back and forth, back and forth. Then all of a sudden, they slammed it from the highs of 191, and they were these big, fat, ugly red candles, like as if Alibaba was going out of business. I still can't figure out a fundamental reason why they did that, but I don't need fundamental reason. Some hedge fund decided to dump Alibaba at 191. So the stock now has created it. Forget this. This was the uptrend channel, and that even had red candles along the way. So now we are here. Upper end of the scale is around 190, 191. Lower end of the scale is 180. This is a major support level at 184.45. You can read that by simply looking at this. This is a gap. Lower end of the gap is this. Upper end of the gap is this. Not that hard. Right there. So I know pretty much exactly, give or take a few cents, what the stock can do if it pulls back or goes higher. And so can you guys, because this is not rocket science, trust me. Okay? And I'm drawing all the stuff here. There's another mini gap here, which happens to coincide with the downtrend line. And that downtrend line is at 188. So the way I trade Alibaba, I trade it in stages as it's moving higher. I trade it with the candles. I don't stay married for it for weeks and weeks, but I stay with the swing trade maybe a day or two, because the candles are quite volatile. Each of these candles are, and with options, the profits disappear. You guys agree with me on that, right? Yes?
Yes.
Yeah. So if I'm an options trader, I'm going to one eye on the charts, but I have my eye on my P&L too. So that's it. So if it gaps up like that, like I said, like I put in the morning, sell large profits or sell profits or sold 80% of the thing. And even if you have a small amount, just sell it. You can always enter it. So this is also a very defined chart at this point from a swing perspective. And if somebody doesn't care about the volatility, then, and not looking at the screen every 5 minutes, which unfortunately I don't have the luxury of doing because I got 12 plus screens staring at me, forcing me to look at them. And that sometimes can be a detriment because you do stupid things because I'm seeing too much. Sometimes ignorance is bliss. All right. So too much technical stuff is like gets you a little bit nutty. So at this point, 188 is a sell zone. I put a red arrow here. It might pull back here, create. This is the inverse head and shoulder. Head, left shoulder, right shoulder. It can easily pull back $2 for no reason. And then Go straight up, 191. That would be the bullish picture. The bearish picture is it breaks through this gap and basically falls back towards the 180 range. So you can trade it both ways. But so far it's looking good. What we have on the broader picture is this. 1, 2, 3, 4. That's it. Somebody says, oh, it's going to go to $200 because they sold to every singles and doubles and triples, you know. Well, look, if like they say in the business, if everybody knows that, then don't you think it's priced into the stock? Think about that for a minute. So as a professional trader, as a technical trader, when I see too much retail excitement in a stock, I focus more on the technicals. Because by the time retail knows, Joe Schmo thinks that every single, that the singles day was the biggest, which was very strong, obviously, it's sick numbers. Don't you think Wall Street has already priced that in the stock? So stocks which are generally very excitable by retail traders, I tend to take a cautious eye on them because the machines are designed to destroy retail traders, not to keep you happy. That's the reason tactical traders tend to be more consistent profit makers. And I think all of you know that by now. Don't get too swayed by the news because by the time the news is known, it's already factored into the price. Simple. Here's Tesla. Tesla is not a stock for the average Joe. This is a purely technical trade. You can trade it for $3-4 just when we think it's going to break out. It pulls back. So there's a lot of different things that I look at. I'll show you another chart of Tesla, which is the same one but on Thinkorswim, and you'll see. So basically, there's a big gap here. If things work, and I believe they're showing off their semi-truck, right, on Thursday, thing looks like Darth Vader. I mean, unbelievable. And it looks like it's just going to like drive over everything on the road, you know. It's like a Tesla semi's coming, like everybody's just like poof, on two sides of the road, just waiting for that beast to pass. You saw the picture, right? The one that Bob found. He tracks Elon Musk's tweet. So basically, you guys saw it, right? The one that I put out there, Elon Musk's the semi. Look it up. Yes. It's scary looking. You know, it's definitely wild looking. Well, anyway, bottom line is this here: if things work, remember these are all 2-3 point moves. So I don't get phased around with that. I don't like it. I don't buy too much of Tesla at a time. I'll tell you that, because that's like, you know, sometimes I regretted it because when it does this type of run and you're not fully loaded, you're like, come on. But hey, what can I do? Unless I see a pattern developing, I'm not going to overload it. Play with a few calls. If it doubles, you double your money. What's the big deal? It seems like these days a lot of traders, first of all, they're not making money. And secondly, when you're giving them 200% returns, they're like, oh, you know, yeah, it was a nice trade. Nice. 200%. Look, maybe it's my humility as a trader, but 200% is 200%, guys. What do you mean it's nice trade? A nice trade is making 10% on your money, which most services give you out there. 200%. It's a freaking awesome trade. It's like, thank God that you're doing this and making 200%. Thank God anyway for everything that we do. So the bottom line is here, it's creating a very defined pattern. Okay. So I'm trading off this chart primarily. So look what it did. It was trying to break out. Now I'm also showing another one of the breakout charts that Trent is also following on the other side, and you guys should be following too, which is off the quad system. Okay, that one looks very different. That's the reason why I use those advanced platforms, because I can get a different view and I present it to you guys so you guys can see that too. On that one, it is showing me that it's trying, because that one's showing me the pivots and the whole works. So at this point, there's a big gap here. Upper end of the gap is 320. Lower end of the gap is 307. Guess what the stock did? This is not rocket science. It goes to the lower end of the gap and then it pulls back. Now, if somebody's just watching prices, they're like, oh man, this is looking really bad. Well, in fact, it's not looking bad because this pullback, okay, is contained within this uptrend line, which is approximately around 295. Now, it might seem really crazy, $7 lower, but if you're managing your trade and the cost averaging and stuff and playing off this as a swing trade, then you will do very well. You don't need to lump in and go crazy here and then you're down 40% on the options, because 40% on Tesla on the options is nothing. How many times have we bought Tesla? It's run up and you just doubled your money in 20 minutes, because that's just the way it's done. So this, to me, is looking like a kind of a sideways flag. I know what my downside is. I'm not going to be waiting around for that downside. I'll bail if it breaks below this 299 level or 298. What is this level? Hold on. Yeah, 295 or so. I might bail earlier if I have profits. That's called trade management. But if this goes, then it's going to take out, it's going to hit first the downtrend line, this blue line here. I didn't put it in red because this is also a falling wedge, and that is at 314. So the stock closed at 303. Let me zoom in. This is this is the fast high beta momentum stock. Just from here to here, ladies and gentlemen, is $10. Okay, I got $20 in my pocket. What's that song? I got $20 in my pocket. Always imagine you have $20 in your pocket and you gotta make money. I know I gotta make money. So my point is real simple here. Just from here to here on the larger scale, this is a daily chart, mind you, which cuts out a lot of the intraday noise. You got 10 points. And if it hits here, chances of it hitting the upper end of the gap here at 319 becomes more viable. Now, the other thing that I'm watching on the daily charts is the volume. Notice that the last 2 days, there has been nothing but buy volume. The volatility algos will move the stock up and down. You're just watching prices, you're dead. You're dead. If you're watching the rest of it, you're not just going to be alive, you're going to make money. Dead as in a trader dead, all right? While trading in your P&L. So the volume's nice, it's all green. And I'm noticing that these stochastics seem to be starting to get back over 20. And if this starts to go like this, that's when you hit the gas. That's when you pedal to the metal. You buy more and you trade it for 3, 4, 5, 6, 7 points, and you sell it. Just the way I'm showing on my charts. If you're following prices, you're going to, once it breaks out, let's say it goes to 320, you're like, oh, that's it. It's definitely going to go to 330. There's no guarantee. There's a downtrend line here intersecting at around 326. I'm very precise with my Tesla trades. Okay? So you can't be just looking at numbers and say, oh, yeah, it's definitely going to go there. No, it's not definitely going to go there. So this chart is very clear on it. And I hope I've been very clear on what I'm showing. Here's a wide channel, and that lower channel is 281. So if the stock, for whatever reason, does crash to 281, we want to be pretty heavy buyers because that's a gap fill. See? We want to be pretty heavy buyers on the stock at the 270, 274 level. And that's the reason why I have that as it. That's a gap. That's a gap. As long as we don't want it to go to those gaps, obviously. But if it does go there, then you know what your buy points are. Any questions on Tesla?
Nope.
No? Okay, good.
No.
Anyone else? All right, good. Because I'm being very simplistic on how I'm explaining things, and I know tonight's session will help a lot of other people. That's the whole purpose of me doing this. So here is price line. All right? This is a purely mathematically driven whatever it is. Okay? Hardcore. It's a hardcore stock for hardcore traders. And you don't need to be a hardcore trader if you just buy some of the lottos sometimes when I'm putting them down and you just run with it. Sometimes traders, I have traders who've been with me for many, 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 many years. They never come in the chat room. They just sort of, they're on time and stuff like that. And those guys just basically say, okay, he's buying the lottos at $3. Okay, I'll buy the lottos at $3. And next thing you know, those lottos go to Kingdom Come. You know that. So Priceline did something interesting. Priceline filled a major gap from February 27th, 2017. Many of you don't remember, but February 27, 2017 was when the market really exploded higher after the January correction. Okay? Whatever the case, that's a significant gap that the stock. Now, this is one chart that I'm using. The other charts, feel free to scroll through my Twitter feed and you'll see it. The other Priceline chart I'm using is equally powerful. Can everyone hear me?
Yes.
Okay, because PB said that he couldn't
Hello?
hear. Yeah, I'm here. It's your microphone. Something with that microphone. Can you hear us now? Mike, can you hear us? Sorry, Mike. PB, can you hear us now? One second. Let me just type in. All right, I'm going to continue. Okay. All right, guys. You with me? All of you? Brian.
Yeah, I'm here.
Hey, what's up, man? I didn't see you come in. Good having you here. Okay, good. All right. So Priceline is a very dramatic chart. One thing about Priceline's characteristic is the stock trades by appointment. We used to joke around with that like years ago when we were on Wall Street. It's a very, first of all, think about it. Priceline, even after the correction, is a $1,700 stock. How many mom and pop can buy? You buy one share of Priceline, it's $1,700. No mom and pop buys Priceline. Nobody. Okay? Nobody. You want to gift your nephew a one Priceline share? The nephew will be like, "What? Well, I just gave you $1,700." Like, "Oh yeah, I love you." So the bottom line is nobody, big boys and machines trade Priceline. Okay? So all little fries like us, we trade the options. In order to trade the options, you gotta know Priceline's chart. And Priceline's chart is trades by appointment. It won't do anything for the first, let's say, 3 hours of the day, and all of a sudden it'll wake up in the afternoon. And the best days to trade Priceline are, some of you know, which days are the best days to trade the Priceline options. Some of you have traded Priceline, you know. Thursday and Friday. Don't ask me why. It tends to get real busy around there with Priceline. Okay? So, point is, this is a pretty powerful move. Upper end of the gap, remember, this is a big gap. So upper end of the after earnings. So it filled, first of all, it filled a major gap. That is significant. That is very significant. The second thing is, very simply, capitulation volume. Whoever wanted to sell pretty much sold. I can't detect volume of that size. Yeah, there was one here, but that's when the stock was a lot lower. Let me see. Bear with me. This was the last drop on Priceline, June 23rd, 2016. The stock fell from 1,367 to 1,149. That's 200 points. The volume was equal. What was that?
I think that was Brexit.
That was Brexit. Yes, June 2016. That's right. That was Brexit. Thank you for reminding us. Yep. So you had that 200-point drop. You had the same capitulation volume. Isn't it weird? Almost 3.2 million shares. 3.2 million shares. You have to look at capitulation volumes because this type of capitulation volume signifies a short-term bottom is in place. Period. That's it. There's no two ways about it. Okay? Whether it be Brexit, whether it be in earnings, and their earnings weren't that bad. It was just their guidance. They're always very conservative about their guidance because they're a real management. They don't lie, unlike many other managements. Really, Priceline management is very, very conservative, the way they present their numbers. Whichever the case, that volume spike shows a significant amount of capitulation. Capitulation generally creates a short-term bottom. So given all that, let's look at the STOs. The STOs basically bottomed, and what we need to see on a swing trade on price line is the STOs zigzagging its way higher, and that means the stock will get up to the lower end of the gap, which is 1746, which is nothing, which is only 50 points from here. The stock has moved from here 1632 to 1700. That's 70 points in 2 days. And we alerted people on that. Okay? So, along the way, there's a lot of hurdles it's got to climb. The first is this red line here, which was the previous support. That support was 1805. So let's say the stock really has a, these big companies do that, is their business picks up, they come up with an announcement, whatever, that they're looking good and whatever the case may be. You will hit a major roadblock at 1800. Now 1700 to 1800 is 1800. If it enters 1800, the stock is going to go up to what it was traveling in this channel for a while, and that lower end of the channel is 1860. So that's 160 points higher from here. Is it possible? It sure is. Is it telling me it is going to do that? No, it's not. So it's a trading stock for now till it establishes a trend. Now, even when it establishes a trend, it tends to be very choppy. Nature of the beast. There's nothing you can do about it. Okay? So I'll be updating this chart with a few more lines and stuff, which will give me more of a directional flow. But at this point in time, the first level of contact looks very likely, given the size of these reversal candles, very likely it does this. Bear with me. It pulls back a few points. Sorry. Creates a flag. So let's say it pulls back 20 points, right? That's 1675 or so. Right there. Or 1680. And then breaks out. That breakout is not going to wait for you or me or grandpa or grandma to say, oh, I'm going to slowly walk in and buy it. You got to buy it. You got to sit on it, because when that breakout comes to test this lower gap, it's going to happen in a flash. It's going to gap open and keep on running. That's just the way these things work. And it looks likely it's going to do that. But prior to doing that, it is very possible that the stock consolidates with a high of 1708 right there. I believe it closed at 16. Where did it close at? Closed around 1695. If it bumps up to 1709, 1708, the highs from Thursday and Friday, then you're going to see some heavy resistance. You want to sell there unless it breaks out. It creates a flag, and that flag has a high probability of breaking out as long as the STOs show us the direction. It's really as simple as that. And that's all. That's it. Any quick requests on anything? Futures are still up. Oh, let me show you one other thing here hiding behind this. This is a very important chart. People who think or swim should live and breathe this. Simple. Why? Because this is telling you whether you're going to keep your profits in your pocket or you're going to give it back to the market. It's a 4-hour chart, which is close to a daily. It's right now the candles. This is what's happening right now. Futures are up 4 points. Are now crossing over the 34 line, which is the orange line, and the 50, which is the red line. If it crosses over that, it's going to hit the first downtrend line. It is right now over the major downtrend line that it crossed over. So to me, it's second nature. I'm looking at this stuff. I'm like, okay, I'm seeing what's going on. It's going to hit the second downtrend line, which was established on Tuesday. That downtrend line is at 2587. That's only 4 points away. 4 points from here. However, the way markets are, they might very well do this. Gets up here, hits this downtrend line, pulls back, throws people off, zigzags around, and then makes a beehive to beeline to 25.95, which is the previous high. Is it possible that it gets to 25.95? In my opinion, yes. Why? Can somebody tell me why this Friday is so important? And I've mentioned this many, many times. I know some of you know the answer. What is this Friday, aside from being November 17?
Monthly.
What? It's what? What week? Guys, what about Dano? Dano, come on, somebody else give me an answer, please.
That is a monthly option.
That's exactly.
Monthly option close.
Yeah, monthly option expiration. Thank you, guys. That's right. And that's a bullish event. Not all through the way, but generally till the morning of Friday. So is it possible that they want to print after zigzagging around a little bit? They want to print and retest the highs? Yes. Keep in mind, what day is Thanksgiving? 26, right? What day is Thanksgiving, guys? Come on.
$23rd.
I'm having a memory of what day is Thanksgiving, guys? Anyone remember? Thursday.
The 23rd.
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 Good. So I wanted you guys to tell me that to see if you guys are awake. The 23rd. Given that seriously, all right. Sometimes they're gonna wake you guys up. So what do you call? Given that you got the 17th following before the 23rd. Very simple rule of thumb: never short the market to any degree, especially for active traders before Thanksgiving. Don't do it. The turkey's going to chop you and eat your head alive. All right? Seriously. Just don't do it. Never short the market or be scared of the or be short any particular stock and things like that prior to Thanksgiving or any major holiday. I've seen it happen way too many times. All right? So given the fact we are entering now that phase, once we cross over the 15, it'll be a little bit more solidified because that's mid-month volatility that we always incur, that we are in for smooth sailing till next week. So this is the 4-hour chart, looking good. People who are training their eyes to look at stows, this is the full stow, not the fast stochastics. So this is moving more slowly. It's a combination of the slow and the fast. So this one is, looking still wants to move higher. It's in this triangle consolidation, and that's matching with what I just explained to you. Now, if you look at the 1 hour, you're going to see that it's already overbought. Right there. It's already overbought. So that means the first level of contact will be 25.87, and you will see, and I've shown this hundreds of times, that it's going to do this, and it's going to vacillate around a little bit as long as we don't take out this massive rocket ship hammer reversal at 25.65, which is going to feel like quite a drop, because if we drop from 25.83 to 25.65, that's 18 points, right? So what's 18 times 6? I always take the higher multiple. Is a 108-point drop in the market and the Dow. Can it happen? Oh, believe me, it can happen. One dumb statement coming out of one of the tax writers, especially Kevin Brady, who's a complete idiot in my head, seriously, that guy, the one who looks like Kojak. What do you call one dumb statement out of him on one thing, the markets will drop 100 points just like that. Just like that. Okay? But as long as we hold these levels, especially this level, we're good to go. We're good to go. This is a very powerful support. 1, 2, 3, 4, 5. And for all your benefit and your ease of trading, it's been marked with a red line. Bingo. The next red line is here. Here's your downtrend line. These are all levels of support. If something terrible happens to the market for whatever reason, 25.40 will bring in significant amount of buyers. So please, that's the reason why we chart, because we know what the pitfalls are. We know when not to get excited, too excited. And we know, as tactical technicians, we know how far the markets can drop. Markets are not random. Markets are purely calculated and programmed to go to certain levels if certain things happen. So that's your ES chart for you that when I'm putting out there, take a look at it. That's it, guys. Any other quick questions I can answer? Feel free to ask me. I'm here. You know. I know what time is it? It's 8:55. It's fine.
Frank, I had a quick question.
Of course.
If I wanted to get text messaging, right? Is there a way to get text messaging, or do I always have to go to Twitter?
No, very simple. Twitter sends you an automatic SMS text message. I think I had mentioned that to you when I first spoke to you. You just go to settings on your side on Twitter. Okay? So you go to your settings.
Okay.
You go to your settings. I'll show you. You go to your settings right here. Okay? Profile and settings. And then one of them says mobile notifications. All you do is put your cell phone number in there. Anytime that I'm putting anything, you will be automatically immediately notified.
Okay.
Yep, it's very simple. Just go to your settings, go to settings and privacy, and
Settings privacy.
yep, settings and privacy. And I believe it's in there. Let me see here. It's not settings and privacy. Let me see. Somebody help. Oh, I'm trying to find it for you. It used to be right there. No, Twitter's changed things. So used to be right under settings. So let me see.
All right, I'll play around with it tonight and see if I could figure it out.
It's used to be right there. Look under. Yeah, you guys did that, right? With the mobile notifications. Somebody.
Yes.
Yeah. So
Yes.
where did you do it? You did it under settings, right? So help Nick out. Yeah, go ahead. It was under.
No, I was going to say, yeah, you told me where it was, and honestly, I can't even remember. But it was there. It was in Twitter under mobile. Yeah, under mobile settings.
Mobile settings, exactly. So look under settings and privacy. Oh yeah, it is, Nicole. Basically, you go under settings and privacy. Once you go under that, it says settings and privacy. Okay?
Right, I'm there right now.
Go and look on the left-hand side. It says mobile.
Right.
And it says put your phone number. Huh? There.
I think I may have to go into
Right there. That's what it looks like. Okay, on the left, mobile.
Okay, I see it. Okay.
And then you put your phone number in. All right?
Okay, all right, I'll do that. Okay. All right, thank you.
Not a problem. Anyway, so that's very important. Okay, guys, so we're good to go. Any other quick question? No? All right.
Nope,
no problem. Who's this, Brian?
That was Parvez.
Oh, it's Parvez. Okay. All right, guys. See you tomorrow. This week should be a great week. I mentioned a couple of very important pointers because a lot of people are going to look at this. Why do I keep putting my phone number in public? You know, now all the bozos are going to call me. Geez, you know, I'm such an idiot. So anyway, so most of you have mine anyway. So bottom line is that so far looking good, and we have some good trades along the way. And I've mentioned to you on the momentum trades, you got to take those. You got to trade them fast. Go up 3-4 points, like the Rokus, the Squares, and that type of company. There's no time to wait. Buy a little bit. Don't go nuts on each of them. GE, I've explained the thing. This could turn out to be a big trade. We'll see how the invested thing. And if it pulls back and it doesn't create that ugly red candle, we're good to go to buy in hard. So that's it. On that note, have a great evening. God bless you all. I'll see you guys tomorrow.
Bye.
Bye-bye.
Okay, thank you. Night.